Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a quick little supplement video to the video that I did earlier today. But before I jump into the content, do me a quick favor if you would. Go ahead and press that like button on the video and also subscribe to the channel if you haven't already. So what I've been looking at today is I've been looking at crypto as a whole, and I've been looking for these reload zones. I've talked about this a lot in past videos about the different zones that I'm thinking about buying crypto in. But the more I look at this, the less and less this looks like a correction to me, and the more and more this looks like a bear market. I was taking a look, I was actually on my Twitter, and I was looking at this old post I did. This is actually from August 10th, 2018, so a little over a year ago. And I did this post, and at the time, I basically thought that we were in the denial stage, and that we still had, the panic and anger and depression and everything still to come. Price was right around $7,000 at the time. And I remember thinking, I'm probably wrong, so I'm not going to trade it this way. I'm just going to keep holding my coins and hope for the best, right? At that point in time, I was trading about 10% of my portfolio, and I was holding about 90%. But what I'm looking at now is I'm starting to look at this market, and this correction is very unusual for cryptocurrency. Corrections do not normally take months. Usually what we see with cryptocurrency is we see a correction that lasts anywhere from a couple of weeks to usually 30 days maximum. In a couple of extreme cases, corrections have pushed out to 45 days, I think even 60 a time or two, but it's unusual. And I'm looking at the date here, it's August 29th. This correction started on June 26th. We're over 2 months into this thing, and we still haven't corrected, right? We're still sitting up here around $9,500. Right now it's $9,451. And I don't like that at all. Even as a long-term bull, I don't like that. As a short-term bear, I'm not super fond of that. As much as I like shorting the market, and as much as I enjoy making money when I short the market, it's a lot more stressful, for me at least, to short the market and make money that way than it is to just simply buy Bitcoin and hold it and make money that way. And let me explain why. When I'm holding Bitcoin, right, and we're in a bull market and it's going up, I'm making money passively. I'm still trading, but what I'm doing is I'm trading with the intention of accumulating Bitcoin. So I'm trading mostly alts, and I'm trading Bitcoin pairs. So I'm just adding to my Bitcoin. But in a bear market or in a bear trend, it's totally different. There is no holding. It's all about shorting. It's all about entries and exits. And it's just a lot more stressful. So not real super happy with this. This isn't something that I want to happen, but I do think it's something that's very plausible, and it's a little depressing, to be honest. So let me kind of walk you through this. Essentially, if we take a look at this cheat sheet, and by the way, don't write this off. Don't say to yourself, oh, we just had a bubble, we can't have another bubble. I'm going to explain why this is likely in just a second. So basically, we can look that these bubbles typically start on the disbelief rally of the previous bubble, okay? So here we had disbelief, right? Followed by hope. Okay, here's our hope, right? Here's our optimism, right in here. Followed by belief, right in here. Followed by thrill, right in here. Followed by euphoria, where people start talking about all-time highs. Now, I actually posted this up back in June, right? I didn't really think it was going to happen this way, but it was just like the market was so euphoric and people were talking about all-time highs, and breaking all-time highs in 2019. It just started to remind me of 2017 all over again. So I posted this up, and now I've actually done a little bit more in-depth study now that we're 2 months later. So it really feels like that rally fit this market psychology. And of course, that's followed by complacency, which is this whole belief that we just need to cool down a little bit before we go up to the next leg, right? Before we take off and make another high. Ask yourself, if you're on social media, what have you been seeing people say for 2 months now? Right? Any minute we're going to go up. Any minute we're going to go up. We just need to correct. And then we're going up. Right? It is the definition of complacency. And then complacency is followed by anxiety. And if you read this, I don't know if you can see it in the video very well, it literally says, why am I getting margin calls? This dip is taking longer than expected. Well, we're over 2 months into a correction in cryptocurrency, and corrections, like I said earlier, normally don't last anywhere near this long. So far, this daily chart for Bitcoin is fitting the bill for a bubble. And I'm going to show you two other things real quick. If this is indeed a bubble, it's not like the bubble that we had in 2017. This is actually going to be what's called an echo bubble, if this is indeed a bubble. If we go over to Investopedia, you can read about this yourself if you like. But real quickly, just to summarize, what it says is an echo bubble is a post-bubble rally that becomes another smaller bubble. The echo bubble occurs in the sector of a market in which the preceding bubble was most prominent, but the echo bubble is less inflated and thus it also bursts or deflates, leaving less damage behind. Okay, I think that's what's happening. I think it's exactly what's happening. I think we have a premature rally, and I think we're forming a little echo bubble of the bigger bubble. And that's the reason that I still think we're probably going to go back down to the low 4,000s, and we may even make a double bottom off of that low down there around 31 or 3,200 bucks. That is completely possible. You can, like I said, you can read up on this. They talk about how there's been other echo bubbles. There's an echo bubble after the Great Depression. There was an echo bubble in tech stocks, and there was actually some people believe we're in an echo bubble right now, according to this, in the housing market. I had not heard that. I had heard about the Great Depression bubble, and I'd heard about the echo bubble tech stocks. In fact, I did a video about it a couple months ago, comparing Bitcoin to the NASDAQ and the tech stocks after 2000. So yeah, this is what I'm thinking. And one of the other reasons that I'm thinking this is because of this right here. If we look at Bitcoin, yes, Bitcoin went all the way up to the 61.8 fib, blah, 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 blah. But if we look at the total market cap, and if you look at most of the alts, they didn't. In fact, all this rally did was really come up to the 38.2 Fibonacci level of this downtrend. And now it's come down and it's basically bouncing around the 50 level of the uptrend. So essentially what we did was we just came up and tested the 38.2, which is textbook bear market, right? The fact that we did not break through that is a very, very bad sign if you're a bull. And it's a bad sign if you're a bear too. I mean, at least I think it's a bad sign. It's not good for the market. It definitely looks more and more likely that we are indeed in a smaller bubble. At this point, the way this market looks, number one, I'm not going to be at all surprised if Bitcoin does slide back down to $3,000 or $4,000. And number two, I'm not going to be surprised if a lot of these alts end up dying, right? I wouldn't be surprised to see Litecoin drop back down to that $40 level. And if Bitcoin does, tank hard, if this ends up being another bubble, I wouldn't be surprised to see Litecoin back down even as low as, early 2017 conditions, right? Where it's down under $10, right? I know that sounds absurd, and I certainly hope that's not the case, but I can see that happening. I still have some alts right now that I didn't sell earlier in the year because I didn't want to take the capital gains. I didn't want to pay the taxes on them. And because I didn't want to actively trade them, I thought, I'm better just to hold those. They're long-term capital gains, and I want to leave them that way. So for example, I had EOS that I was up like 500 or 600% on, and holding that EOS, now I'm down big time. I'm not down from my original entry, but it's down over 60% from where it was in June. Same thing with OMG. I'm a big OMG guy, or I was. I'm not really anymore, but I had a bunch of OMG, and it went up to $3.30 or $3.40, and now it's down around $1.10, right? So 67% haircut. I think we're going to see a lot of these alts go back to, if this plays out the way it's looking, I think we're going to see a lot of these alts go back to, under $1. And some of them are probably just going to die. So I'm not trying to be the bearer of bad news. I just want to kind of show you what I've been looking at today and tell you that this isn't one of those videos where I'm like super excited, like, yes, I think Bitcoin's going to go down, I can buy a bunch of it. This is more one of those videos where I'm a little bummed out because I don't like what I'm seeing, and I don't know how long this is going to take to play out, number one. And number two, if it does go that low, it's very easy to sit back now and say, oh man, if Bitcoin ever gets down to $4,000, or if Bitcoin ever gets down to $3,000, I'm going to buy as much as I can. It's a whole lot harder to do it when it gets down to that level, right? So we'll see. We'll see what happens. But I would definitely recommend that you go Google Echo Bubble and just approach this thing with a very objective viewpoint. Don't approach it from a viewpoint of what you want to happen, but just approach it from, does this make sense? Because again, this looks an awful lot like this market psychology chart, the same way this did in August of 2018. And you know, it's a little ironic that we're basically almost exactly a year later, and here I am again pointing back to this exact same market psychology. With all that being said, please remember, I am literally some guy sitting in a spare bedroom. I am not a professional financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional financial advice before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.